All right, everyone, you are listening and watching, of course, President Trump there live on the White House lawn. He is, of course, making his way to Marine Force One. He is en route to Joint Base Andrews and then en route to China with a meeting with President Xi. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters on this Tuesday, May 12th. It's a pretty busy Tuesday. I got to say, Tim, President covering everything from the FDA chief to Cuba, to China, to two big wars, talking a little bit about Russia, Ukraine, that the end of that war is close, a lot coming out. He talked to reporters for a while there.
Yeah, like you said, the end of the war in Ukraine is close. He said Iran will make a deal or get decimated. He said there is lots to talk about with President Xi, mainly when it comes to trade. The president, you mentioned, Carol, also confirming earlier reports from the New York Times and reports last week that the FDA chief, Marty Makary, is moving on. The president said he was having some difficulty. He said he's departing the FDA, and he said that he likes him. He's a friend of his.
Right.
But he's moving on. All
right. Also talking about inflation, my policies are working. We did get a key inflation print this morning. It was a little hot, so we're going to talk to our Stuart Paul about that. Good afternoon, everyone. Welcome. We do see stocks down, bouncing a little bit, but they're off their lows of the session. We've seen a sell-off in semiconductors. You pointed that out because that space, Tim, has been on a run.
Yeah, we're going to dive into that a little bit, too. Also, you mentioned that hot inflation print. Stuart Paul is standing by. Another person we listen to in addition to Stuart is Jamie Dimon. We're going to hear from him a little bit later on market exuberance and a little bit more.
Yeah, he talked about a lot of stuff. Also, Etoro CEO is going to join us, talk about the retail investor trends they are seeing on the platform, talk a little bit about crypto, also competition. There's a lot of choices investors can make.
And Boeing is betting on a comeback on President Trump, China, and an elusive new plane.
All right, let's get you going, folks. A lot going on in the next 60 minutes. Let's get on over to Amy Morris. She's in for Charlie Pellet.
A chipmaker sell-off, inflation data, just as you described, it halted the rally in equities. They are off their session lows now. We do bring you the markets all day long here at Bloomberg. The S&P 500 is down a little more than 0.5%. NASDAQ down 1.4%. The Dow little changed on the upside now. The 10-year Treasury yield at 4.45% and the 2-year yield at 3.99%. WTI crude oil right at $102 a barrel, and Brent crude is closing in on $108 a barrel. Consumer prices jumped in April, led by those higher energy prices. The CPI rose 3.8%. That's up from 3.3% in March and the highest since 2023. The Fed watching as inflation has run above its 2% target for 5 years, while a stable labor market removes any urgency to cut rates. Google reportedly in talks with SpaceX for a rocket launch deal. Now, SpaceX would provide the launch services for Google. The Wall Street Journal reports Google is looking at ways to put orbital data centers in space. A launch deal would put the two companies in partnership as they gear up to compete on orbital data centers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Tim Stanovic.
We will take it. Amy Morris, thank you so much. Well, the Senate confirmed Kevin Warsh's nomination to the Fed Board of Governors. That was about 90 or so minutes ago, with the chamber expected to confirm him separately as chair later on this week. If so, he, as the expected next Fed chair, would have to deal with an accelerating inflation environment following this morning's print that showed U.S. inflation accelerated in April on rising gasoline and grocery costs exceeding wage growth, Tim, in a double whammy for already strained consumers. Higher prices and wages not keeping up. Not a good mix.
No, it's not a good mix. Economists actually anticipate higher costs are likely to persist even in the months ahead. Rising prices for fertilizer, higher grocery bills, elevated oil prices, other goods and services could become more expensive.
All right, so it's going to be tricky. Let's get into how tricky it will be for the next Fed chair and the FOMC overall when it comes to rate policy. With us is Stuart Paul, Bloomberg Economics US and Canada economist, right here on set. Good to have you here. Before we get into the data, based on the data that we are getting, and we know it's not the Fed's preferred inflation measure, President Trump touting that his inflation policies, they are working. Are they working?
Well, this is a particularly difficult print to pull apart. But all things considered, just inflation is running hot. Tariffs unambiguously push up prices, and supply side shocks that are downstream of the conflict in Iran are also pushing up prices, particularly headline inflation. Tim, as you mentioned, it'll end up rippling through things like airfares, things like fertilizer costs, and then food costs. So it's very difficult to say that President Trump's policies have been disinflationary, but all things considered, today I am taking the inflation reading with a grain of salt.
Why?
Well, so there are a few peculiar mechanical items in today's inflation report, particularly within shelter. Now, you'll remember that during the government shutdown, data were not collected for rents and owners' equivalents of rents. And the thing to keep in mind is that housing is sampled every 6 months. The sample rotates on a monthly basis, so you only have points of comparison every 6 months. So the reading today is measuring against a base of basically zero inflation last October. And that's why we got this pop in shelter inflation. We know that folks on the Fed board, previously it was Stephen Meyer, and we expect that Kevin Warsh will pick up the same mantle of this argument, have been focusing on the lagged effects of shelter inflation. Actual market rents are far lower than what we're seeing in the reported inflation numbers, and today's data mechanically overstate shelter inflation anyway. So if we're looking at what's really going on in the underlying core and really services within the core, it's quite a bit lower than the 0.4% month-on-month core reading that we basically got. So again, a reason to take today's data with a grain of
So
salt.
shame on we. Don't call it hot. Me.
Look,
No, I'm asking.
When headline inflation is running about 3.8%, when
not
core
2%.
inflation is running 2.8%, and you know that the Fed's target is 2.0 within core PCE, sure. But when you know that those are the year-on-year numbers, it is hot.
Okay.
But again, today's data point should not be the largest reason of concern. Instead, take today's data with a little bit of grain of salt and just focus on the trend, which is just hot inflation and policies that push prices up.
Should we talk about the other mandate of the dual mandate? The labor market?
Yeah.
Because,
Yes,
and then we'll talk a little
please.
about Kevin Warsh. The labor market's holding up. And I think that's an important thing for us to keep in mind because that's the Fed's job.
Yep.
That's the dual mandate.
Yep.
Stable prices, maximum employment. What would it have to take in order for the Fed to actually do a cut this year? What would have to happen to the labor market?
Look, I think that it would probably take an unemployment rate above 5% for the Fed to deliver a cut this year. The coalition on the Fed is so much more focused on guarding against unanchoring inflation expectations and an acceleration in prices. I think that right now, even though the unemployment rate did sort of, I don't want to say inch up, but it's really just a matter of rounding that the unemployment rate didn't rise. It rose. Unemployment did rise in the month of April. But with the Fed firmly focused on the inflation and the price stability side of its mandate, I think that you would need to see basically 5% unemployment for the Fed to deliver a cut. We know that there are 3 members of the FOMC that are voters this year who don't even want to maintain a dovish bias in their language, let alone undertake a more accommodative monetary policy stance. So I think that it would take a pretty significant deterioration in the labor market. We need to see an increase in layoffs, not the decrease in layoffs that we've been seeing. And I think that we'd probably need to even see some broadening of layoffs, not just layoffs concentrated, say, in high-tech services.
So Bloomberg's Michael McKenzie writing today, not long ago, the Treasury market thought it had the Kevin Warsh trade figured out. Simply bet on multiple interest rate cuts that the nominee had been expected to deliver if he got the job to lead the Fed. Now, with days left before Warsh steps into the central bank's top role, a different view is emerging. So we are looking at wagers in the $31 trillion bond market leaning toward tighter monetary policy, the upshot of robust U.S. growth and war-driven inflation worries. I mean, so might inflation pressures, might all of it ultimately mean, Stuart, that we get a rate hike?
Look, I think that it's really difficult to say that the next move will be a hike. I think that it's easier to say that there will not be a cut this year. So I think that when we start thinking about, let's say, the switching of the Fed's direction, it's a trickier conversation. So, for example, for the members of the FOMC to say that policy is currently too loose is one thing. For them to then advise that a hike would be appropriate is a far different thing. And when you're in the middle of a war in the Middle East, when you're in an evolving trade war, and when you have midterm elections that are coming up, it's really difficult to switch your footing from saying a hold is appropriate even though the policy is inappropriately accommodative. It's very difficult to then switch your footing to say that a hike is appropriate. So I'm not yet to the point of saying that the next move will be a hike. I still think that there is a cutting bias. I think that a cutting bias is probably appropriate. I think that risk is skewed to inflation ultimately falling through time and the labor market loosening. But I don't think that we're going to hit that 5% unemployment that would require the Fed or that would encourage the Fed to deliver that cut this year.
Gosh, it's interesting, huh?
That's why we get Stuart to follow it all for us.
We do.
Also a big day tomorrow, too.
Yeah, exactly. Kevin Warsh, right? We'll see what happens there. We think he's going to get
Well, we think we
confirmed.
know what's going to happen.
We think we know.
Yeah.
All right, Stuart Paul, Bloomberg Economics US and Canada economist. All right, we're going to get to one of our most trusted voices here on the Bloomberg about the economy. We're going to get to one of the most listened to and followed voice on Wall Street. Having said that, in the meantime, just a quick reminder of where we are in terms of the trade.
Yeah, just taking a look at the NASDAQ 100, that's where we're seeing some of the damage today. Off its worst levels, but still down 1.6%. The S&P 500 down 0.5 percentage point, again, off worst levels of the day. The Dow is in the green ever so slightly. Seeing chip stocks really take a hit. A sell-off in the high-flying chip makers driving stocks lower. This after that inflation data showed the impact of energy disruption stemming from the war.
Yeah, stocks down 4.6%.
It was down
said
more than
that,
6% earlier.
Okay,
Yeah.
but still down almost 5%. You've got all 30 names in the stocks lower. That index, though, still up 62% year to date. So, yeah, giving back
A little bit of a give back, right?
Yeah, exactly. Hey, one stock on our radar is JPMorgan Chase, really the company and really the leader. JPMorgan Chase CEO Jamie Dimon, who said fixing stupid trade issues between the U.S. and Europe would pave the way for better growth. He talked about this in a Bloomberg TV interview earlier today from the bank's annual Global Markets Conference. It was held in Paris. Jamie Dimon said, if you ask me what the goals should be for our economic relationship with Europe, it should be, Tim, having a stronger Europe. Both the economies would grow better.
And Dimon said a lot more to Bloomberg's Francine Lacroix, including the run-up in the U.S. financial market. Check it out.
I think there's a little bit too much exuberance out there. It's not just the Middle East. It's, Ukraine, Russia still there, America, China. There are a lot of these complex issues which may or may not affect the market, but then there are issues like inflation. Today's print wasn't so good. So, yeah, I think the market's kind of exuberant, and it may not be completely justified.
So why are they so exuberant? If they're exuberant, are you expecting a correction? And is it because they're looking at AI?
No, I don't think it's AI. I think corporate profit is doing very well. AI will be a plus. So this year it's just a lot more spending, which may be a little inflationary too. But it's more corporate profits. We're doing a little bit more QE. Government's still spending a lot of money. The one big beautiful bill is kicking in. Stimulus offsetting a lot of the gas. I think the gas increase, the dollar of gas is $100 million. The one big beautiful bill is $100 billion that consumers pay. The one big beautiful bill is $300 billion. Deregulation is real. There are these things which are causing a pretty good market right now.
All right, that, of course, I know it was noisy, folks, so sorry about that. Those conferences usually are. That was, of course, JPMorgan Chase CEO Jamie Dimon with Bloomberg's Francine Lacroix at the bank's annual Global Markets Conference in Paris. Sri Natarajan has spent time with it in, an earbud, maybe in his ear, listening to all of it. He joins us. Sri, of course, is Bloomberg News Wall Street correspondent, chief Wall Street correspondent, joining us here in studio. They talked about a lot of stuff, Sri. I mean, we always point out how important it is what Jamie has to say. What stood out for you?
Yeah, I was interested when you said the one name and one stock on our radar today is Jamie Dimon. It just feels like he's always on our radar. Anytime he's speaking, people are paying attention. And it was interesting that right off the bat, he talked about this idea that there is a little too much exuberance in markets, especially considering everything that they're dealing with. He said the Middle East problems, the war in the Middle East right now is a big problem and it's a big deal, and it continues to get worse with each passing day. And you can't underplay that point. To some extent, yes, we're feeling the impact of that here in the US when you look at the inflation print today with gas, rent, food prices all going up. But in places like China where they've reduced demand, in places like India where they're forcing austerity on their citizens, it is already a very big deal in the rest of the world. And the question is, how long can the US remain insulated from that? So what are some of the ways that you can solve for the existing problems in the world right now? Dimon talked about this idea that we need to fix our trade issues with Europe. That's a great point to make, but has he spoken to the president? Because the President Donald Trump, has been very angry with his European allies that they've not been helping him out in his war on Iran. And he has built up this angry posture towards the continent and its leaders. So it's not quite clear that even though Jamie Dimon says that we need to fix some of these stupid trade issues, that there is an easy pathway to that.
Yeah, it's interesting that you say that. The president's actually landing on Marine One right now. He's about to make his way to Air Force One to head to China. And he said that a big part of the trip has to do with trade, and all these executives from U.S. companies are joining him. It wasn't just that Jamie Dimon said the U.S. has to solve the issues on trade with Europe. He said that stupid trade issues between the U.S. and Europe would pave the way for better growth. Does it seem like the White House is getting that message?
I think the point he was making was solving for the stupid trade issues would pay for the better future rather than the stupid trade issues themselves.
Fixing them,
but that's a good point. Is the White House getting the message? We don't know. And in fact, that might be the audience that Dimon needs. That's the audience that Dimon needs to address. That's the audience perhaps that the business leaders need to address, because I don't think anyone in continental Europe is sitting there and thinking we need to have hostile relationships with the US. But it's also clear that it's been very hard for many of the European leaders to get on board with the plans and the ways and the methods of the Trump administration. And frankly, it is very clear, and Donald Trump has made it very clear, that he is unhappy with Europe. He wants them to get on board with his plan, or they will continue to face problems. And that does mean the continuation of the trade differences.
Yeah, it's kind of interesting, though. And in terms of the war, we did have the President Trump, before he got on Marine Force One, talking about the war in Russia and Ukraine, saying that end looks like it's very close, an end to that war, and then talked a little bit about Iran. But you do wonder, I always think about how much President Trump is listening to him. Let's not also forget President Trump's going to have a bunch of CEOs, financial community, and others that will be on that trip with him. So they certainly have maybe a few conversations, perhaps, over peanuts on the plane. I don't know. Do they fly with him? No, I guess they fly separately. Do they fly separately?
Sometimes they fly. There is, the press is on the plane with the president.
The press, but I mean the executives.
Yeah. Oh, I have no idea.
Yeah.
I don't know.
I don't know. Sorry, I'm just wondering.
I don't know the answer to that. Hopefully we get more conversations with Sri Natarajan too, because we love Sri.
We do love Sri.
And I'm happy to share peanuts with the president on Air Force One.
Sri Natarajan, Bloomberg News chief Wall Street correspondent, joining us right here in studio. Sri, thanks.
Amy Morris is standing by. She's in the Bloomberg Businessweek studio with a check on the day's trade and top business stories. Hey, Amy.
Hey, Tim. Inflation continued to accelerate in April amid an ongoing climb in gas prices driven by the war and a jump in the cost of groceries. Consumer prices climbing a sharp 3.8% last month. Figures show the impact of the war is hitting the U.S. economy as those energy costs surge. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.4%. NASDAQ down 1.2%. The Dow now up 0.1%. The 10-year Treasury yield at 4.45%, and the 2-year yield at 3.99%. WTI now topping $102 a barrel. Brent crude closing in on $108 a barrel. Under Armour sank after its guidance for this year missed Wall Street projections, weighed down by exiting a partnership with NBA star Stephen Curry and a financial hit from the conflict in the Middle East. Shares of Under Armour now down 19%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, Amy, thank you so much. Amy Morris, of course, in there for Charlie Pellet. Just pulling up on my Bloomberg.
Down about 5%.
And we're talking about shares of Etoro. They are definitely trading down in today's session. That's following earnings that we got earlier. And despite first quarter adjusted EPS beating estimates and funded accounts coming in above estimates, what's interesting, pre-market, the stock was rallying. Stock, by the way, up about 5% so far here in 2026. The company did highlight in its release how it introduced 24/7 trading for commodities, equities, and indices, added Japanese equities, and launched crypto trading in New York during the first quarter. So we're going to talk to the company's CEO.
We got Yoni Assia with CEO and co-founder of Etoro. He joins us here in the Bloomberg Business Week studio. Good to have you on the program. Trading activity on the platform. You have a real-time view on this. There are some echoes right now of 2021 meme stocks What are you seeing?
So what we're seeing actually is people that switched from crypto into commodities. So switched from sort of low vol, declining Q4 into Q1, crypto into very exciting opportunities in metals and in oil and natural gas. So that's something that we've definitely seen a surge in commodities activity happening in Etoro.
Super aggressive, like the move? Like, was it very clear the amount?
We were surprised how many people who originally joined Etoro into crypto and to equities shifted to where the interest is, right? To where the volatility is. Days like today, right, where CPI is suddenly surprising people and stocks go down. It's like retail are consistently, by the way, for the past 4 or 5 years, are actually grabbing, in my view, a lot of the beta from institutions, because institutions are immediately going risk off. Let's figure out what's happening here. And retail are like, hey, stocks are down 10%. Let's buy some of these stocks in better prices than yesterday.
So, Yoni, on a day like today, I don't know if in real time how much you can share. Like, are you?
I know today is going to be elevated trading engagement on Etoro, on stocks. There's no question about it. That's what volatility does. It increases the interest of retail investors. They log in, they look at what's happening, they start analyzing. I think the next stage, both of growth for Etoro, but generally in the entire retail investment industry, is where we have AI agents that are 24/7 looking at the markets, which are transitioning to 24/7, and actually looking at the markets and trading in users' accounts. So that's one of the recent launches we did. It's an agent portfolio. So you can take a part of your portfolio and say, take $5,000 out of my 50,000 portfolio, and now create an agent portfolio that tracks the movements in the markets, in the tech stocks, look at what's rising and falling, their EBITDA multiple, and trade based on that strategy.
So essentially, you have a tool where you can use natural language to tell the
By the way,
agent.
natural language, either with Etoro's agent, which is Tori agent based on Grok 4.2. We talked about models before that. Or you go into Cursor and we're connected there as an app, or you go into Claude Code or your OpenClaw and do it there. So it's either bring your own agent.
Are people using this?
Etoro's. It's early days. We just launched it 2 or 3 weeks ago. We're seeing 50% week over week growth and already more than 500,000 trades done in agent portfolios.
Why are you using so many different LLMs or different AI providers?
So we've seen, I would say, November last year with an inflection point with Opus 4.5. Now we're at Opus 4.7. But what we've seen is actually...
This is from Claude.
This is from Claude. But when we, for example, Evald, which is checking how good the model is, it's looking at what's happening in the markets right now. Actually, Grok was the best because it has all the real-time information. When we're looking at developer tools, Cursor is great. When we're looking at enterprise-level knowledge, OpenAI is great. So we've decided to enable Etorians to use all of the tools because what I'm seeing people suddenly delivering at 10x or 20x or even 50x at what they were able to deliver pre-AI.
How many people on the platform are using AI tools or agentic AI?
It's not something that we've yet to announce, but we have seen a tenfold increase in the usage of AI, both
from
by the
zero,
way of
basically?
Employees. No, not from zero.
Okay.
We launched originally Tori, I think about 18 months ago.
Okay.
But since we moved it to a frontier model to Grok, we've seen roughly 10x growth.
Talk to us about accounts. And obviously there's accounts that grow because the market goes up or their investments go up. But talk to us about acquiring new people onto the platform. What kind of growth have you seen?
So we've seen 12% year-over-year growth in funded accounts. And again, every time something happening that's interesting in the markets, we see elevated accounts growth as well as Etoro. So part of our marketing strategy, which is now being powered by AI, is finding those opportunities in the markets, then finding the right segments of customers that might be interested in what's happening in the markets and get that message to them, not only in Etoro, but on Google or on X or on Tabula or on Meta.
What about prediction markets?
We've just recently announced the acquisition of Zengo, which is a new non-custodial wallet for eToro, which supports now thousands of new crypto assets for eTorians. It enables also DeFi solutions, and prediction markets will be part of the DeFi solutions offered on Zengo.
When will you offer prediction markets on the platform?
So we're now setting up the timelines. It's an acquisition that was announced and closed 2 weeks ago or last week.
Yeah, we spoke about it on Bloomberg Crypto last week.
So we're very excited about that opportunity. And we are also in the process of registering our TradFi business as futures trading, which allows prediction markets as well.
Will you offer sports predictions on the platform?
On the TradFi part, probably we'll wait with sports and focus more on financials. So we do believe that there's a lot of value of price formation, hedging opportunities in anything related to finance. I haven't checked the recent Poly market on whether we beat earnings, for example, today. I'll check it out after the show. So I do think there's...
So you do look at it?
I do look at it. We have like our own interface even now. An app on our app store enables you to actually look at the prediction markets.
Crypto market just got about 25 seconds. How has that business changed? I mean, Bitcoin's down 36% from a high back in early October. Exuberance?
No, I think what we're seeing, first of all, 4-year cycles in Bitcoin. We've seen that before. We topped in October. Now we're going down a bit. I think eventually it recovers, reaches all-time high again. But I think a lot of the dialogue has shifted to capital markets moving on chain. 24/7 is a great example of that. But you have all of the regulators in the U.S. also talking about capital markets moving on chain.
They are indeed. Yoni Assia, he is the CEO and co-founder of Etoro, joining us right here.
2:40 on Wall Street. I'm Amy Morris. Consumer prices jumped in April, all led by higher energy prices. The CPI rose 3.8%, up from 3.3% in March, and the highest since 2023. And the Fed is watching as inflation has run above its 2% target for 5 years, and a stable labor market removes any urgency to cut rates. The economy adding more jobs than projected in April. Total non-farm payrolls rising by 115,000, well more than the 65,000 increase expected in a Bloomberg survey. The unemployment rate was unchanged at 4.3% in April. That's in line with Wall Street's estimates, making the case for a near-term rate cut more remote. We check those markets for you all day long here at Bloomberg. The S&P 500 down 0.4%, NASDAQ down 1.2%, the Dow gaining now 0.1%, the 10-year Treasury yield at 4.46%, the 2-year yield at 3.99%. WTI crude just topping $102 a barrel, and Brent crude is just topping $108 a barrel. JPMorgan CEO Jamie Dimon says fixing, quote, stupid trade issues between the U.S. and Europe would pave the way for better growth. Dimon warning that investors are over-exuberant, which may not be justified given all the risks that have popped up in recent months. And the Senate confirmed Kevin Warsh's nomination to the Federal Reserve Board of Governors with a 51-45 vote. That grants him a 14-year term. The Senate plans to confirm Warsh as chair of the Fed, with the chair's term running for 4 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Masser and Tim Stinovec.
All right, Amy Morris, thank you so much. So when Richard Nixon landed in Beijing back in 1972 to end a quarter century of Chinese diplomatic and economic isolation, this was a really big moment. You probably know that. His hosts were so enthralled with the U.S. president's airliner that within months, they ordered 10 Boeing 707 jets.
Yeah, the purchase kicked off one of the most consequential commercial relationships in Boeing's 110-year history. It helped turn China into the world's second largest aviation market after the U.S. So writes the Bloomberg News team, which includes Sid Philip. He's Bloomberg News chief correspondent for global aviation. He joins us here in the studio. Boeing in China, just before we get to today, just give us some background going back to the 1970s, Richard Nixon's visit, and how then Boeing was kind of seen as this diplomatic tool.
So then, as is now, Boeing has been a diplomatic tool for the U.S., and Boeing has been crucial in kickstarting aviation across the world, including in China, where the aviation sort of boom started with the Boeing 707. Before that, we had a lot of Russian planes in China. And so getting the 707, and then airlines in China have subsequently ordered the 777, the 747, the 737NG, and the MAX. And so Chinese airlines currently operate thousands of Boeing aircraft, and they haven't placed a new order in about almost a decade. So the last time they placed an order was when Trump visited back in 2017. And so the next phase of aviation in China is really dependent on whether or not the Boeing gets a brand new deal from the Chinese airlines.
Why in 10 years? Was it all the problems at Boeing, Sid, that China backed off? Was it the relationship between the U.S. and China? What was it? Or
it was a combination of multiple things. So China, remember, was one of the first countries to ground the 737 MAX after those two fatal crashes. And then the rest of the world followed, and the 737 MAX was grounded from 2019 to 2020. And thereafter, we went into the pandemic when airlines stopped purchasing and sort of hunkered down to preserve cash. And since then, the diplomatic relationship hasn't been the greatest. And so we haven't really seen the orders that Boeing's been hoping would materialize actually materialize.
One thing that's different this time around, though, versus the 1970s is that there's a homegrown, I'm not going to call it a competitor yet, but Comac, the Chinese state plane maker, sort of their version of Boeing, but with more state support. They have their version of the 737 that is actually flying in China now.
Absolutely. So the Comac C919 is basically C929 is basically a competitor to the 737 and the A320 that Airbus makes. The problem with that plane, though, is that the volumes that they're producing in are not really sufficient for China to sort of depend on those planes. So they're still sort of growing production. I mean, it takes years to ramp up production to the levels that Airbus and Boeing seem to do every month. So Boeing is currently aiming to make 42 737s a month. That's That's much more.
Wow.
That's more than like Comac can make in 2 years.
So wait, help me understand this, because we talk about Chinese manufacturing and say it's the envy of the world, right? Robotic, automatic, manufacturing. Why is it that they haven't kind of conquered this? They are very good at studying what other folks are doing and figuring it out. So why haven't they succeeded to that extent here?
It takes a couple of things. I mean, one, the Comac plane depends a lot on Western avionics. The engines are made by CFM, which is a joint venture between Safran and GE. The avionics and other things are also made in the West. And so they're still ramping up production, basically building a plane which takes years to ramp up production because it's just so complex in terms of getting certification, making sure the plane's safe, making sure it sort of performs to the expectations. So that takes a while. With
those planes, I mean, I know I'm sort of going off topic here a little
but
bit.
I know where you're going to go.
Yeah, with those,
this is what I'm thinking.
The regulatory environment with European regulators and the FAA, would they ever approve a Chinese-made plane to fly in the U.S. or in Europe?
So China is actively trying to get the Comac plane certified in Europe at the moment, but regulators still haven't cleared it. And remember, even getting the 737 MAX 7 and 10, which is a variant of an existing product has taken years for Boeing, and they're still not at the finish line for that model. So getting a brand new jet in China certified will take a while.
All right, so let's get to the fate of Boeing, right? I thought it was fascinating that the plane that has been so popular was in development back when Nixon was in China. So talk to us about the future, like what comes next, right? Because they've got to be thinking about where do they go next.
Absolutely. And so for Boeing, the biggest challenge is trying to get to the next generation of aircraft. And a lot of aircraft manufacturers look at revolutionary ideas. I mean, Boeing famously toyed with truss-braced wings, where you had trusses supporting these really long, thin wings. And there was GE and CFM is talking about their RISE program, which is open rotors, and those are sort of rotors so they perform like a jet engine, but they obviously are sort of more fuel efficient. But they have those big rotors that are outside. So Boeing, we understand, is going for something that's more evolutionary than revolutionary, where they aren't sort of eschewing all those sort of big ideas and saying, let's get something that looks more or less similar to what we have today, but with more fuel-efficient engines, longer wings, and that would be able to use existing infrastructure, but without having to airlines have dealt with revolutionary change with even just the engines on the A321, which the new GTF engines, which have been significant sort of problems for a lot of airlines.
And fair to say that Boeing learned with the debacle around the 737 MAX and essentially retrofitting an old airframe?
I mean, Boeing has sort of learned with the 737 MAX that the 737 family is probably at the end of its sort of you can sort of stretch it out and sort of take it further into service. I mean, they have to sort of start with a brand new design, but they will try to keep it within sort of the evolutionary range rather than sort of go for something completely radical, because airlines don't really want to experiment. They want something that's reliable, that gets their customers from A to B more efficiently.
So still human beings as pilots, not autonomously flown.
I mean,
no Waymos in the air.
We don't know really.
But we could do that. I mean, look at what the military does.
Planes really fly themselves, right? If you think about the systems that are on those big jets.
There are systems today that can land a plane safely and all of that, but at the same time, in tricky situations, pilots do step in.
Right.
And
shout out to the pilots. I'm just going to throw that out there.
Listen, do I think automation's great, but do I want somebody as a human as a backup just in case something goes wrong?
I mean, it's difficult. I mean, you've seen those videos on Instagram with the Waymo driving off with someone's bags in the boot. I mean, imagine planes flying there.
No, thanks.
I don't want to even think about that. Sid, thank you so much. Sid Philip, he is Bloomberg News Chief Correspondent for Bloomberg Aviation. This is the Bloomberg Big Take today. You can read the story and more from the Big Take on the Bloomberg and at Bloomberg.com/Big Take. Be sure to check it out. Stocks on the move when we come back.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to kick off the last hour of trading on this Tuesday, May 12th. Carol Masser, Tim Stenovec live here at Bloomberg headquarters in New York City. Bouncing around on the equity trade, we are definitely off our worst levels of the session. We're off our best levels of the session as well. Still down about 29 points, 0.4% lower on the S&P 500. NASDAQ 100, ouch, down about 436 points, down 1.5%, nearly 1.5% on the day. But again, off its worst levels of the session. I'm Carol Masser, along with Tim Stenovec. Let's get to some stocks on the move. You're watching Intel. The stocks, quite a reversal in today's session from what we've seen as of late.
Yeah, that's right. Shares of Intel right now down by about 9%. It's not just Intel. You got Qualcomm taking a hit. You got Micron down. You got AMD lower today. Semiconductor, power equipment, memory chip firms, they're falling today. There's a little cooling of the AI rally that we're seeing. A lot of these chip stocks, though, have been going to new all-time highs as the sector has been boosted by continued investor enthusiasm over AI infrastructure build-outs. Intel, for its part, is just off of all-time highs, up this year close to 220%. There's also a great story, Carol, on the Bloomberg terminal today about how this rally, $440 billion in just 6 weeks.
Yeah.
Has short sellers circling right now.
I bet they are. The problem is if it continues to turn higher, they're going to have to cover those shorts because that can be a painful trade. But we shall see, because many would say that after the run-up, you might want to see a little bit of the air come out of the marketplace. Hey, I'm going to go over onto something we don't talk a lot about, but it's the number one gainer in the S&P 500. We're talking about Zebra Technologies. That stock up about 12.5% here. Barcode scanners, printers, interactive kiosks. That's what this company makes. It's a consumer electronics company. It did report first quarter results that beat expectations. The company raised its full year forecast for both adjusted earnings and free cash flow. It's about $11.8 billion market cap company. Like I said, not one that we talk about a lot, but nonetheless, investors are running into it in today's session.
Investors running out of Under Armour. Shares of Under Armour taking a hit in today's trade, down 17.4% right now. This after the company released guidance for this year that missed Wall Street projections. Remember, there's that exiting of that partnership with NBA star Steph Curry. Financial hit too. Also, Carol, the financial hit coming from the war.
Yeah.
A good check on the consumer as well. But this is a company that's in the midst of a turnaround right now. So this is also just a check of how that turnaround is going.
No, right. There are some that it's macro related. There are some that it's specific to a company, and I think that's a really good point. In general, what we are seeing, certainly from some of the companies, and I think about the inflation data that we got out, even though our Stuart Paul said that, not necessarily he's going to go into the camp of a hot print, but nonetheless, for some consumers, the rise in energy prices, and energy makes its way through so many different products. I also read about the supply chain for semiconductors, and yes, the AI grab and demand, it's other pieces that are also in demand, and that has just raised prices for all of those similar products that go into consumer electronics and different consumer products. So consumers kind of getting hit on a lot of different levels.
Well, we spoke to Denise Polonis yesterday over at Sally Beauty, and those shares took a hit after she reported earnings yesterday. And I think one of the challenges that she highlighted, at least for us, Carol, was that they serve a lower end consumer. Those lower end consumers are the ones who are getting hit hardest by an increase in energy costs. So, that share of what they spend on those things, like gas, is a lot higher than wealthier Americans. So they're going to have to pick and choose as a result of those higher prices.
Yeah, and I think it's safe to say that some of those consumers, right, don't have much of a financial pad. So any of these increases, they feel it right away. So certainly something we're keeping a watch on. All right, that is a look at some of the stocks on the move on this Tuesday. Check out our Stock Movers podcast, 5-minute episodes of big winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast. We are getting ready for the next 2 hours of Bloomberg Businessweek Daily. Having said that, an interesting story about AI demand so much that it's creating a new asset class?
Yeah.
I'm shocked.
You probably heard about this at Milken.
A little bit.
Yeah.
Yeah. Was it Larry Fink?
Larry Fink was talking about this.
Over at BlackRock.
So, and now CME is out with some big news here. So we got Kat Doherty and Scilla Brush joining us in just a few minutes. Also, did you see what copper has done today?
No.
Close to $14,000. Okay.
Yep. Great read on.
Not quite at a new record, but getting there.
Yeah.
We're going to speak to Timna Tanners over at Wells Fargo Research all about the rise in copper. She covers aluminum and steel as well.
All right, and then a little bit later on in our 4 o'clock hour, we're going to get into kind of the media world. Disney's got its upfronts today. We've been looking at what Netflix has been spending on content.
And the economic effect of that. That's what they want you to focus on.
I bet they do.
Yeah.
Look what we're doing.
Look at how many more people are going to South Korea as a result of K-pop Demon Hunters, for example.
Have you seen that yet?
I have heard lots of that music in my home all the time.
Because the kids like it?
Kids love the music, yeah.
You have to see it. I don't know.
Yeah.
TBD.
I don't know what to tell. I don't know what to tell you.
All right. Well,
music is catchy.
I know what to tell you. Do not go anywhere. The close is coming your way with Romaine and Katie coming your way on Bloomberg Television. Tim and I, though, of course, continuing on Bloomberg Businessweek Daily. Catch us on YouTube, Bloomberg Originals, and of course, always on Bloomberg Radio. You are listening and watching Bloomberg.